Hello, everybody, and welcome to another podcast with Investing Education Academy. Today, we're going to be talking about tariffs and decisions around tariffs and why it's important for anybody who is investing in the stock market. Really, it's important for everybody, but specifically, we're talking to those people who invest. Leon's going to tell you why we chose that topic, why I do a little bit of housekeeping.
Yeah. So for those who have been following, and I hope you have not been following me close as I I have, because you have to live your life. But this is kind of what I do. We're coming up on a decision point in the next month. So as we all know, Trump and his ridiculous tariffs kicked off in April. Market crashed 20% in over about a little less than a week, over about a week. Then he reversed most of them, not all of them, but most of them. Well, he put a pause on them for 90 days, and that was April 7th, I believe. So what that means is what is it? No, sorry. Well, we're at the end of May now. We're basically going to June, so we're just saying basically in a month, in a couple weeks, month and a half, month and a half. Either the tariffs are going to go, the majority of the tariffs are going to go back on, or Trump, as he famously does, he'll extend it out even further. We don't know. Just so what recently happened was he recently threatened 50% tariffs on the European Union for I think this Sunday. I can't remember the date, whatever the Sunday is. But then he pulled those back and pushed them out to June 9th. Now, will that June 9th actually happen? Who knows? Again, this chaos is ridiculous. Like this, I mean, what he's doing is absolutely ridiculous. But the my fear is, and we kind of seen this in the past. Eventually, when politicians say things enough times, the market gets used to it and then basically ignores it. So while Trump keeps saying, "Oh yeah, deals are coming. We're working diligently. I'm going to push out these tariffs." At some point, we see in the past, and I think this happened actually during his first term when he did this over and over and over again. The market got annoyed and eventually dropped because they were like, the basic businesses are like, we can't plan around this chaos. We're going to pull back spending. We're going to pull back hiring, which a lot of that has actually started now. But it just causes chaos in the business cycle. So right now the market is like,
And
okay,
real quick, for
go.
for those of y'all who are wondering, like, well, why does it matter to the businesses? These tariffs affect what their profit margin is going to be, how much goods and services they can order and or pay for, their margins on their side when they're doing their predictive measures to see, how they're going to present to their stockholders. So you got to think this is a trickle down effect. These businesses depend on um, numbers in order to really run their companies. So if they don't have predictable, trustworthy numbers or information, it causes them to have to operate in this space of like unknowing. And anytime any business doesn't know, it's either going to cause a drop or it's going to cause a pause. You're very seldomly going to see a business in a state of unknowing climb. It just
Right.
doesn't happen.
Mhm.
So that's the reason why it's important.
Yeah, so kind of like with the decision point we're at is we're basically a month, let's just say month and 1.5 months out from the possible reissuing of all the tariffs. And businesses right now, the market is a state of, we're going to give Trump the benefit of the doubt. We're hoping these deals come through. We're gonna, like, because everything in Washington, nothing happens until the deadline is like tomorrow. So everyone's looking at it as, the street is looking at it as, okay, the market has climbed up since April 7th. We've gone up, I think, another 15%. With the in the hopes that come that deadline, which is I think July 7th, by then or right around then, either trade deals will be announced, or there'll be at least what they're calling a understanding of a memoranda of understanding, which just means they're really serious and they're working it through. None of that has happened yet, right? So this is all speculation by the market. And as that deadline comes, I mean, July 7th is going to be here, like I said, in a little over a month. And if we don't see progress in June to those deals being executed, the market is going to get even more nervous. So we're kind of at a decision point right now where the market is, in my view, I think it's kind of in a holding period. I don't think we're going to see much higher or much lower from here. We may just kind of go chop sideways until that July 7th date hits, right, or right around it hits. And then we'll see what happens. So what does that mean for y'all? Basically what we're saying is that be prepared for possible volatility. Volatility mainly because, again, like Brent said, businesses are uncertain about what's going on. The market has kind of given Trump the benefit of the doubt of we're going to get some deals eventually. We're going on 2 months. Remember when he announced these, he was talking about these countries are lined up to make deals with us, and they're knocking down our doors, and they can't wait to make deals with the U.S. We're going on 2 months, and nothing has been announced. And I will say one deal has been announced. It was from the UK, but I'd completely discount that because we actually had a trade surplus with the UK. There was no need whatsoever to tariff the UK. They bought more from us than we did from them. So I just totally discount that deal. It was kind of a dog and pony show. But the main ones are Canada, Mexico, and really China. And this, as far as we know, there's been really no dialogue, and there's been no movement. So just be prepared over the next month and a half for seeing volatility. If we do get a major drop, and as we always say, that's a wonderful buying opportunity. Anybody who bought the drop on that happened from this April 2nd to April 7th, if you bought it, you gain 15, 20, maybe 30%, depending on the stock that you bought, because the market
Depending on the stock.
Say what?
Depending on the stock.
Depending on the stock, exactly, absolutely. Depending on the stock, yes. But as what we say, every drop is a buying opportunity. It feels terrible. It feels horrible. But ultimately, once all the drama passes and all this Trump chaos passes, we'll see the market march higher. So just in the very short term, I'd say the next month and a half, be prepared for some volatility. And any pullbacks you get, any drops in the stocks that you own and what you're looking at, just dollar cost average. Maybe buy a little bit here, buy a little bit there, because we're gonna see some volatility around the market over the next month and a half.
Yeah, and when we talk about dollar cost averaging, we're not saying, if for those of you all who don't know what dollar cost averaging is, it means putting in a specific amount of money into your investment on a reoccurring basis, some systematic format of investing, maybe every month, every week, just something that's systematic that you can sustain. Again, in this market in particular, please, this should not be money that you need to pay groceries or pay your children's school or pay for healthcare. These are dollars that you would have had to sign for investing anyway. But particularly in this particular market, you want to have a very long-term perspective with these funds. So if you're looking like for the quick flip, or I just need to get in, get out, I'm trying to time the market, this is definitely the environment where time in the market is going to beat trying to time the market in most cases. We know you all are watching who, your day traders, and you're like, how much I made? Yes. And I also know how much you probably lost over the years of you day trading. But, you can text us if you want to talk about it or, put it in the comments. But the point is, for the average retail investor, you want to put in enough where you're going to see some gains, but not so much as going to hurt you emotionally to, kind of weather this storm that's already here.
Yep. And I actually heard an interesting stat today that may kind of buoy the market a little bit, is that private equity investors, so private equity is where people invest in private companies. Usually large institutions invest in private companies. They're actually pulling their money out of those private deals and putting them into the market. Reason being is liquidity. So liquidity just means to get their money out, and they usually do it via IPOs. Well, the IPO market is basically kind of shut right now because, again, the chaos around Trump. A lot of companies don't want to go public. So what a lot of these big firms are doing is they're moving money out of private companies and putting them into the stock market. That's been happening over the last couple months. Now, will that continue? Who knows? Right now, there's still, I think there's $6 or $7 trillion with a T, $trillion right now sitting in money market funds, primarily because people are just scared, right? They don't want to commit to the stock market because of the chaos. Now, when all this chaos dies down, if that happens during Trump term or afterwards, a lot of that $6 or $7 trillion will likely move into the market, and we'll see a raging bull market again. But for now, there's a lot of money sitting on the sideline just because of the chaos that's going on, and people are waiting. And another thing I heard also is that retail investors, which is now a massive cohort of the market, they actually. So what happened? The market dropped from April 2nd to April 7th, dropped about 20%. During that time, hedge funds, which are another big institutional buyers, they actually pulled out of the stock market Why retail investors, people like you and I, actually bought into the market around the April 7th low, and we gained from that jump from April 7th low today, which is about 15-20%. So they like to call us investors dumb money, the retail investors, but we collectively got that right on that bounce. Now, not saying get cocky, not saying buy every dip. I'm just saying there is opportunity. We as investors took advantage. We as retail investors took advantage, and we won. Will it happen tomorrow, the next couple months? Who knows? But the point is, just be prudent. Like Brent said, dollar cost average in. Maybe do a set amount every month, every week, whatever you can do. That way you average out from the highs and lows. You get kind of an average price. But as I said, we can see that we can win when we buy dips. The one from the April 7th low to today was pretty fast. It was what they call a V-shaped recovery. Will that happen again? Again, we don't know. But that's an example of getting in, buying dips, and just holding. And you can see returns over the short term and definitely the long term.
Yep. So everybody, we thank you for being with us. Leon, did you have anything you want to add before we wrap up?
Yeah, I just want to say one thing about about our stock picks inside our platform. So at the end of every video, we said we owe our members some picks. And some of you may have noticed that sometimes there are no picks. And I just want to say the reason is because at that time there was nothing that we saw that we thought we would recommend. So we're always going to say we're going to give you picks. So just letting everybody know because we don't really know when we're not going to. But if you don't see, and actually maybe when I push out the podcast, I'll actually make a note in there whether the reason why we didn't have picks this month. But it's the other to say sometimes there won't be stock picks inside the membership platform, and the reason is we see nothing favorable at that moment. So I just want to put that FYI out there.
All right. I guess so. This is perfect timing to say. With that being said, we owe you 2 stock picks. So look for them inside the group. If you have any questions about it, or even something historically was chosen, put into the comments. We'll talk about it. But for you all who are beginners in the stock market, and this is your beginning, this is abnormal, but it's also normal at the same time. The market always goes through some type of hiccup, some type of kind of the blip on the map of on its way up. So it's not as if we haven't seen this before. We just haven't seen it this way. And
Right.
so this is a very unique way for the market to, we have a unique leadership. And so the market is responding uniquely, but at the same time, the market is downs. And historically, it's going to go bottom left, upper right. So for those of you all who are especially new to the market and you're like, or just thinking about getting into it, and you just don't have the stomach for it, put in an amount small enough where you can go to sleep, but please don't just abandon the market, because this is still the highest place to get a return on your investment, especially when compared to like banks or even some private equity deals. Like Leon said, they're highly illiquid. They take a long time to mature, to have a liquidity event occur. So bottom line, don't run from the market.
And just one last point on that point Brent said about don't run from the market. So an example of that is on August 7th, I believe it was, when Trump paused most of the tariffs, the market, the S&P 500 jumped 10% in one day. To show you how ridiculous that is, the S&P generally on a day-to-day basis moves less than 1%, about half of 1% per day. On this one day, it moved 10 times that, right? So you could 10x your money if you were in the market on that day. So now, is it going to happen? No, we don't expect that to happen. Even if Trump was announced something tomorrow, we don't expect that to happen again. But the point is, if you're not in the market, you can't experience those type of returns, especially again long term. If you don't see a 10% gain in a day, great. You'll definitely see it over years and decades, way more than that. But you cannot experience a 10x in your money in a day if you're not in the market. It's rare, but it did happen like 2 months ago.
And again, I know some of y'all thinking, well, also, you don't see when your money just falls 7-8%. So right. we are saying there is balance, and we are aware of the balance. But overall, in the long run, you're going to, the SP is 10%, or some markets return 10% per year since it's like inception on average. Mm-hmm. So just know, more than likely, you are going to have your best chance for a higher rate of return inside the market. So don't run away. Small amounts in, manageable, enough where you can sleep at night, and expect volatility. We will see, the market come back at some point, and we'll be here for it. So please, if you're looking for more information from Investing Education Academy, you can go to www.ieanow.com, and then we can go from there.